Hi, I'm Adulpol Charukesnunt, Director of Advisory Services at Thornton in Thailand. For many companies, acquiring a new business is a mark of growth and success, but it can make financial reporting more complicated. Under the accounting standard of IFRS 3, a company acquiring a new business must include the acquisition in their financial statements. This means determining the purchase price allocation or PPA of any business combination. IFRS 3 defines business combination as any transaction of the event where a company acquirer obtains control over business. Controls requires first, power over the business, second, exposure or right to valuable returns, and third, the ability to use power to affect returns. So a joint arrangement or a combination of businesses under common control would not be subject to IFRS 3 requirements. IFRS 3 also does not apply to asset acquisition. This is where the assets and liability acquired don't involve a substantive process that collectively contributes to the creation of outputs. Under IFRS 3, purchase price allocation or PPA is an accounting process used in business combinations to allocate the purchase price of an acquired company to its tangible and intangible assets and liabilities. The purchase price is typically allocated based on the fair value of the assets and liabilities at the time of the acquisition. The purpose of a PPA is to provide a fair and accurate representation of the value of the acquired company and its assets and liabilities. This is important for a number of reasons, including financial reporting, tax purposes, and strategic decision-making. The PPA process involves several steps. First, the acquiring company must identify all of the assets and liabilities of the acquired company. This includes tangible assets such as buildings, equipment, and inventory, as well as intangible assets such as patent, trademarks, customer relationships, and goodwill. Next, the fair value of each asset and liability is determined. This may involve the use of professional appraiser, market data, and other valuation techniques. The total purchase price is then allocated to each asset and liability based on its fair value. Finally, any asset's purchase price is allocated to goodwill. Goodwill represents the value of acquired company's brand, reputation, customer base, and other intangible assets that cannot be separately identified and valued. Fair value can be difficult to measure, especially for a company's intangible assets. This causes problems for the acquirer later on, because the more assets are not identified and included in the fair value, the higher the goodwill will be. Goodwill is the amount paid in excess of the target's net value of assets and liabilities. So high goodwill suggests that your company has overpaid. How do you know when an asset is identifiable and should be analyzed separately from goodwill? An asset is identifiable when it's capable of being separated from the entity and being sold, transferred, licensed, retained, or exchanged, and arise from contractual or other legal rights. So when is an intangible asset identifiable? The International Accounting Standard 38 or IAS 38 sets criteria for recognizing and measuring intangible assets and requires disclosures of them under IFRS. Under IAS 38, an intangible asset is identifiable if it is non-monetary, lack of physical substance is expected to generate future economic benefits, and is controlled by acquirer at the date of acquisitions. Overall, purchase price allocation is a complex process that requires careful analysis and judgment. It is important for companies to work closely with professional accountants and valuation experts to ensure that the PPA accurately reflects the value of the acquired company and its assets and liabilities. With so many factors to consider, allocating PPA can be difficult, especially when your company already has your hand full with the actual business acquisition itself. Grant Thornton has extensive experience in business combinations and the related accounting requirements. We can help you transform the complexities of PPA evaluation into a smooth and painless process. If you would like to learn more, get in touch.